Hey there, investing iguanas. It's Iggy here, and I've got some exciting news for you. We're shaking things up a bit on the channel, and I can't wait to share it with you. First off, I want to introduce you to Ivan and Irene, our awesome new podcast hosts. These two are absolute whizzes when it comes to finance, and they're here to bring you fresh, relevant content in a whole new way. So, what's the deal with this podcast format? Well, we figured it's time to make finance even more digestible. Ivan and Irene will be chatting about all things money, from stocks to CPF schemes, in a casual, easy to follow conversation. It's like eavesdropping on two finance experts at a coffee shop, minus the awkwardness of actually doing that. This new format is all about making complex financial topics feel less daunting. Whether you're commuting, working out, or just chilling at home, you can tune in and soak up some financial wisdom. Don't worry though, I'm not going anywhere. You'll still see me around, breaking down the numbers and giving you the scoop on the latest market trends. This podcast is just another way for us to help you level up your financial game. So, are you ready to meet Ivan and Irene? Let's go.
Okay, so picture this with me for a second.
Right.
Have you ever heard of Raffle City, Chongqing?
I have, yeah.
Imagine this complex of skyscrapers in China.
Right.
So grand luxury apartments, a massive shopping mall,
Wow.
even a sky bridge connecting it all.
Sounds impressive.
It really is, and it's kind of a testament to how much CapitaLand
Yeah.
poured into the Chinese market.
Right.
But now it feels like that investment might be a little precarious.
Yeah, it's a striking image for sure.
Yeah.
And it's a perfect illustration, I think, of what we're kind of diving into today. CapitaLand is practically woven into the fabric of Singapore's economy.
Yeah.
You know?
Right, and this isn't just about like one company's performance or anything like that.
You know.
They're privately held by Temasek Holdings,
Right.
which is basically tied to Singapore's sovereign wealth. Exactly. So when CapitaLand sneezes, the whole country reaches for a tissue.
Yeah, exactly. And those sneezes are getting harder to ignore.
Yeah.
Because China's economy, as you know,
Yeah.
is going through a little bit of a slowdown.
A bit might be an understatement, I think.
Yeah.
When we saw that GDP growth figure of 4.7%.
Yeah, it's
A far cry from the booming growth they're used to.
it's a significant drop.
It is.
Yeah.
And it seems like their property market is taking the biggest hit.
Yeah.
We're seeing like falling home prices, declining sales.
Right.
Our sources paint a pretty stark picture.
Stark is right. And this is where CapitaLand's huge investment in China comes back to potentially bite them.
Yeah.
You know, maybe they poured billions
Yeah.
into residential, commercial, industrial projects there,
Yeah.
banking on China's continued growth.
Right. But the reality on the ground is shifting.
Yeah.
And we need to kind of understand why that is.
And one of our sources, the Investing Iguana, called this a perfect storm for the Chinese property market.
Yeah.
Does that about cover it?
It's definitely a mix of factors.
Okay.
You know, first we have this oversupply issue. For years, China's answer to economic growth was simple: build, build, build.
Right.
But that created a bubble, especially in housing,
Yeah.
that couldn't last forever.
And now those empty apartments and unfinished projects,
Yeah,
like a physical reminder of that.
Yeah, absolutely.
Overzealous building spree.
And then you layer on top of that China's demographic shift.
Okay.
They're facing a shrinking workforce, lower birth rates. Fewer young people ultimately means less demand for housing in the long term.
This isn't just a temporary dip. It's a fundamental change.
So less demand, more supply. Talk about a recipe for disaster in any market.
Yeah.
But there's also this cloud of like waning confidence, right?
Absolutely. And one of our sources highlighted Mark Mobius,
Right.
a big name in emerging markets, who pointed out that China's entrepreneurial spirit seems to be fading. Less risk-taking, less investment, and that has a ripple effect on the entire economy, real estate included.
Okay, so China's property market is shaky. CapitaLand's pretty exposed. That's the bad news.
Yeah.
But let's not forget about their global reach.
Right.
Their website highlights a presence in over 250 cities across 30 countries.
It's impressive.
They're not just betting on China.
That's a great point.
Yeah.
It's like they say, don't put all your eggs in one basket. Diversification can be a lifesaver in situations like this.
So how much can this global diversification really help CapitaLand, though?
Yeah.
Can it actually offset potential losses in China?
That's the million-dollar question, isn't it?
Yeah.
And the answer, unfortunately, isn't so simple.
Okay.
It really comes down to the scale of the China problem.
Okay.
If it's a short-term dip, diversification might be their saving grace.
Right.
But if China's downturn drags on, well, that's a whole different story.
Which begs the question, Is CapitaLand cutting their losses and getting out of China?
Yeah.
Or are they doubling down and hoping for a rebound? It's a tough call for sure.
Yeah.
They can't just abandon ship in China, but
Yeah.
they need to be smart about it.
Right.
One thing that really stuck out to me was this article we have from Nikkei Asia highlighted how CapitaLand is doubling down on Southeast Asia,
Interesting.
particularly Vietnam.
Okay.
They're talking about investing up to $110 million
Wow.
in building and acquiring industrial factories there.
Okay.
That's a pretty clear signal to me.
Yeah, that definitely sends a message. And when you look at it closely, it makes perfect sense.
Yeah.
Vietnam is becoming a hotspot for manufacturers looking to diversify their own supply chains,
Okay.
moving away from China.
Makes sense.
There are growing concerns about rising costs in China, trade tensions, those demographic shifts we talked about earlier.
Right.
Vietnam, on the other hand, offers a young, skilled workforce and a government that's very pro-business.
Right. So it's like that old saying, go where the growth is.
Exactly.
But they're not just putting all their Southeast Asian eggs in one basket either, right?
Yeah.
Right.
The Nikkei article mentioned Malaysia and Thailand as well.
You're right. They are eyeing industrial parks, logistics facilities, basically anything that keeps goods and services moving smoothly.
Right.
One detail that really jumped out at me was CapitaLand's interest in a special economic zone in Johor, Malaysia.
Okay, hold on, back up.
Yeah.
For those of us who are not real estate moguls,
Right.
what's so special about a special economic zone?
Basically, it's a designated area with different rules than the rest of the country.
All right.
Think tax breaks for businesses,
Right.
streamlined regulations, all designed to attract investment and create jobs.
Gotcha.
In this case, it's a joint project between the Malaysian and Singaporean governments.
Interesting.
And it seems like CapitaLand wants to get in on the ground floor.
Ah, so a potential hotbed of growth.
I get it, but it's not just about where they're investing, right?
Right.
It feels like CapitaLand's also shifting what they're investing in.
You hit the nail on the head.
Yeah.
It all comes back to adapting to a changing world.
Right.
Remember how the investing Iguana mentioned CapitaLand might start focusing on properties that are more resilient to economic downturns?
Yeah.
Well, it seems like they're putting that into action.
They're talking about things like industrial assets, logistics, data centers,
Yeah.
stuff that people need no matter what the stock market's doing.
Exactly. Think about it.
Yeah.
Even if people are buying fewer homes or renting less office space,
Yeah.
the demand for warehouses, data centers, and efficient supply chains doesn't just vanish.
Right.
In fact, with e-commerce and digital services booming, those sectors are only going to grow.
So CapitaLand's diversifying geographically,
Yeah.
shifting their investment strategy. They're really trying to navigate a tricky situation.
Yeah.
But let's bring it back to our listener.
Okay.
They're probably wondering, what does this all mean for me?
That's the key question, right?
Right.
The investing Iguana put it well. This whole CapitaLand situation is a case study in global real estate risks and opportunities.
So break it down for us.
Okay.
What are the key takeaways for someone who might be invested in real estate, even indirectly?
If you're invested in REITs or real estate investment trusts, or if you own stocks in companies with exposure to China's property market, this is a good time to pay close attention.
Okay.
Watch what companies like CapitaLand are doing. Are they pulling back? Are they adapting? Their actions could be a sign of broader trends to come.
So it's not just about the headlines about China's slowdown, but how the savviest investors are reacting and adjusting their strategies.
Right.
That's where the real insights are.
Precisely. But of course, the big question still hangs in the air.
Yeah.
How long will this slowdown in China actually last?
That's the billion-dollar question.
It is.
And I don't think either of us has a crystal ball handy.
Oh.
But, that uncertainty is exactly why it's so important to stay informed,
Right.
to understand the factors at play, and to be prepared for different scenarios.
Absolutely. And that's where things get really interesting for anyone listening.
Okay.
This isn't just about some far-off market.
Right.
What happens in China's economy affects all of us.
It's like that butterfly effect you always hear about.
Yeah.
The slowdown in China flaps its wings,
Right.
and then suddenly you have a hurricane in your investment portfolio.
Yeah, it's not always that dramatic.
Right.
But you're getting the idea.
Right.
A slowdown in China could mean slower global growth overall.
Right.
And that has a ripple effect. We'd see everything from changes in interest rates to higher prices for everyday goods.
So it's not just about whether CapitaLand wins or loses in China, right?
Right.
It's about how adaptable they are. This might force them to become a stronger, more resilient company.
Right now, you're thinking like a seasoned investor.
Okay.
Challenges often breed innovation. And don't forget, CapitaLand has Temasek Holdings backing them up.
Right.
We're talking about one of the most strategic sovereign wealth funds out there.
Yeah, they don't mess around.
They have a track record of making smart moves.
So while this has been a bit of a roller coaster ride for CapitaLand,
Yeah.
I think it's also a good reminder that the global economy is constantly changing.
Absolutely.
What worked yesterday might not work tomorrow.
Right.
And the companies that thrive are the ones that are willing to adapt and evolve.
Couldn't have said it better myself.
Yeah.
And that's something we can all learn from, whether we're talking about investments, careers, or just trying to make sense of the world around us.
Absolutely. I think the takeaway here as we wrap up this deep dive is stay informed, stay curious, and most importantly, stay adaptable.
Be ready to change.
The future's always uncertain, but that's also what makes it so fascinating.
Well said. And I'll leave you with this thought. What if this slowdown in China, challenging as it is, pushes companies like CapitaLand to become even more innovative, even more global? What if it sparks new opportunities and partnerships we can't even imagine yet? It's something to ponder as we navigate the ever-evolving global economy.
Excellent point to end on.
Yeah.
And that's all the time we have for today's deep dive. We've covered a lot, but hopefully you have a clearer picture of CapitaLand's position in China, the challenges they face, and the strategic moves they're making to adapt. But remember, this is just the start of the conversation. Keep learning, keep exploring, and we'll catch you on our next deep dive.